This one's for the XRP Army. I know you're strong, I know you're big, and I know XRP has gone through turbulent times, but I think it's going to come out on top. XRP, we know, has been around for a while. It's a powerhouse, but today we're going to look at the technicals. We're going to do an update from the mid-July video that we did and see how on point we were. So if you like today's video, like, subscribe, hit the bell notification because I want to bring you daily value. We are getting close to 1,000 subscribers, so I appreciate you being here with me. If you don't know me by now, my name is Chigi. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been trading currencies for over 15 years. And I was featured in this best-selling book, High Probability Trading Strategies, back in 2008. We've been really focused on crypto and blockchain for the last few years, and that's what we're going to go into today. So let's dive into XRP. So I did a video which it got launched on July 21st. I think we covered 8 coins that day, and one of them was XRP, and this was the analysis. It said, look, XRP is doing a textbook wave 2 as an A, B, C, D, E. And we said we should be coming towards an end of a wave 2. You've got a question mark there that should coincide with this momentum reversal. And then in the same video, we said from a theory perspective, Elliott waves, this is where we are in the grand picture. This is how I'm seeing the psychology of the markets. We got this 1, 2, 3, 4, 5, this wave 1. That's what we're referring to as up here. And then we've got this correction. Typically, a typical correction is a 3-wave A, B, C. That's referred to as a zigzag. Whereas this one here was turning out to be a bit more complex in 5 waves, which are A, B, C, D, E, which happens, you know, quite a lot, not as much as an A, B, C, simple zigzag. And then we finished the video off with this chart analysis to say, look, we've hit price, Fibonacci price, Elliott wave pattern. We've got a momentum indicator that's suggesting that we're coming towards a low, so we should expect upside movement. And what we were saying was this initial wave 1 of this wave 3, this initial wave 1, you see that little line here, just above that green circle, that is what the first anticipation is. So the real question is, what happened next? What happened next? Well, this date, we'll see what it was exactly. We'll jump into our live chart. So let's dive into a live chart, literally live as of today. So that date was around, it was the 20th. The analysis was done on the 20th of July. I think the video got posted on the 21st of July. So it was right in this zone. So let me just draw a square here. So it's nice and clear. This is where the last video was. So if you can look at this square, this zone over here, and we just look over here, that's where we were, right? And we're anticipating this move to the upside, just as shown over here. So XRP has reacted quite nicely. It's had a nice move up to the upside, and that's what we're going to look at today. What does this mean? What is it suggesting to us? What's likely to occur? Now remember, with technical analysis and with Elliott wave Fibonacci, it's measuring the psychology of the market, and we're looking at probabilities. Meaning there's a higher probable outcome, but not a guaranteed outcome. So we're always looking at probabilities. That's why you often see me put a question mark to say, look, this is what it looks like right now. But if the price action moves differently, then we have to reevaluate everything else. If this low gets taken out, we have to reevaluate. That's important to note, especially if you're making decisions based on some of this information. So let's now just look at this. So there's a couple of things that I want to bring to your attention. First of all, something called overbalance of time and price. What does that mean? What does that mean in English? Right, well, we've got this wave D, what we're calling a wave D, that moved in a nice wave 1, wave 2, wave 3, wave 4, wave 5. Now these moves to the upside, these two here, is this move bigger? Is it bigger? And that's what we mean by overbalance. So let's look at that in really simple terms. So this move here was bigger than this one here. So this was the biggest move here, this ABC correction here, right? And it moves up this much. Right? I'm just measuring it as a line. And now if we just pull it over here, we can see that this move, if I just zoom in, make it a bit clearer, I can zoom in here. You can see that this move here to the upside, this move here is bigger than this move. It's bigger, right? You can see it, right? It's higher. So there's an overbalance of price, but there's also an overbalance in time. Well, actually it might match up. It's not as clear because how long did it take for this ABC to form? Let me just see which one's the high point. This one's the high point. And and has it overbalanced? And it has. So if you look at how long, if we just do a vertical line, this is important because these are details, but these microscopic details will give you an indication of the psychology of the market, where the bulls are getting strength and the bears are getting weakness, meaning there's more buying happening and less selling happening. So there's a turning point. Has the trend reversed? And this is often the first indication. Doesn't mean it's going to be guaranteed that it's going to reverse, but if we now look at the high point here, just looking at the price, this here was the high point. You can see that it's an overbalance in price, time as well. So the time taken from here to here is greater than the time taken from here to here, right? It's greater. So now we've got an overbalance of both time and price. Hopefully that's making sense. That's important for us to know, because that's our first indication to say, hey, this is looking likely that this will be a wave E of a wave 2, and this low shouldn't get taken out. Now, if it does, there's a possibility it may, so there's no guarantees here, but the probability suggests there's the first. It was W.D. Gann who said it nicely. He's an old school trader, 1800, 1900. He said when there's an overbalance of time and price, trend reversal is inevitable, and then one of the best times to buy is on the first pullback, and that's what we want to look at today. So hopefully that makes sense. Overbalance of time and price. So we've kind of said, okay, especially based on just this last part of the move, this part here. Now, when we do look at the whole trend down, this was, it was a massive move to the downside. This whole trend down, there was these corrections as well. These corrections. Well, we looked at that one. This correction. Now we haven't, exceeded that in terms of price, and I would like to see that, exceeded, which will be, a greater move than that. That will give us great confidence that it's really, really reversed. So we still got some work to do with XRP. But for this initial part, it says, look, we've got an indication that the market's reversing. So then what does this mean down here then? So let's just zoom in for this part and get rid of this as well. Get rid of this. So what does this mean for us? Well, first of all, the momentum is now gone bearish. It means short term, the next few days will be sideways to down. That's likely. And normally when you get a move up, you do get a correction. So when I pull up this chart here, this is the theory. I teach the theory of Elliott wave, and you'll see a wave up is followed by typically by a correction. There's a wave up followed typically by what? A correction. A wave up followed by a bigger correction, right? And it's typically 1, 2, 3, 4, 5, and then a big correction. So what we're anticipating here on a micro scale is this part here. We got this wave up, and then possibly going to get a pullback. And that's what we want to look at with XRP. Now, we don't want to get too, I like to look at the macro picture, especially when you're just looking at it long term, because XRP is a powerhouse project. It's been around for a while, but let's do a micro picture just so you get an idea more on the theory and the thinking of how to measure psychology. So we move to a 4-hour chart where every one bar represents 4 hours. And you'll see this, we're using TradingView, and in the top left hand corner, you'll see 4H. 4H stands for 4 hours. We can drop it down to a 1-hour chart where every bar represents 1 hour. Previously, it was on a 1-day chart. But before we dive into this, I just actually wanted to quickly go to the weekly chart. I'll keep that in the top left hand corner. The biggest thing with the weekly data is you'll see there's this bullish reversal. The blue line is going over the red. The last time that happened was down here back in March. And look what happened to the price action. It was a massive surge to the upside. And momentum indicators can be very helpful for us to predict the highs and lows, especially when combined with Elliott wave and Fibonacci price. Down here, you'll see that it marries up quite nicely as well. Here, not so much. So this bullish reversal gives us a nice indication. But the daily is a bearish reversal, so sideways to down for the next few days. So what are we looking at over here on the 4-hour chart? So these Elliott waves, actually, they happen on a macro picture and they happen on a micro picture also. So what typically we should expect is, I mean, we're seeing this here, it's not as clear. And just so you're clear as well, Elliott wave patterns only show it that clearly, identifiably, and where it's practically useful to us around 50% of the time. The other 50% of the time, there's not a clear chart pattern. And there's no point putting chart patterns or Elliott wave counts when it's not clear. However, with that said, we can kind of see this pattern here. It looks like a 1, 2, 3, possibly a 4, and then a wave 5 forming. Something like this is what we should anticipate. Let me just change this to a wave like this. Now, it is possible that this high has been made already, and then we should expect some type of correction. So a correction, whether it's going to happen over here, or if we're going to get a bit more of a move up and then a correction over here, we should anticipate that. And then when that happens, and if that happens, what tends to happen afterwards, if you just go back to the daily chart, just move it like this. What happens on the daily chart, let's just say we've got this correction and we get a 50% correction. Typically it's 50% to 78.6% the first pullback to a new trend. The first pullback to a new trend is typically 50 to 78.6%. What tends to happen next is the next wave is where we tend to see a lot of strength. And if that occurs, that's going to be good news for XRP, because that shows that the buying and the confidence is coming back of the market as a whole, but XRP in particular. So that's what we're going to focus on today. And then how should we analyze this? Well, like we did before, we expect the momentum to come down, and then on the next bullish momentum reversal, which will be down here somewhere, we should see it should coincide with time and price and pattern. And if we see that, then we can see XRP. So now I'm just going to zoom out for a second. I want to zoom out because I think there was one of you asked me a great question about XRP. Let's just get rid of these lines. Let's get rid of this line. We can keep these lines here. Let's get rid of this. Right, I want to just do a macro picture. You know, how do you calculate a macro picture analysis on recent data? So again, I'm just going to jump back to this again. So remember, we got a wave 1, a wave 2, and what typically follows is a wave 3. Yeah. Psychologically, the market goes in these patterns and cycles. You know, there's the price action, it gets overbought, you know, it gets overheated, it gets overvalued, and then there's profit taken. That means selling, and then the price comes back down, and then the market starts to go, now it's undervalued, and then the whole buying action happens, and the markets are always contracting and expanding all the time. And they're also more often than not related to a special number called 1.618. It's the golden mean. It's the main Fibonacci ratio. And that's what we're going to use to predict. Yeah, we're doing the prediction. We're saying based on this data, if this is the reversal of the trend, this down here, if this ends up being the reversal of the trend, of this move down, the trend's been down for, when was the date? April 14th, which coincided almost perfectly with Bitcoin's downward trend. This has been a downward move. But what we're saying is this pink box could be the low. Yeah, highly probable a wave 2 low. What follows a wave 2? Well, typically what follows a wave 2 is a wave 3, right? Wave 3. Boom. And a wave 3 will typically exceed, if it ends up being a wave 3, will exceed the previous high of the wave 1. Yeah. But by how much? How much do you get? By how much? How do you know this? How much? Well, typically a wave 3 is 1.618 of wave 1. Now, TradingView is quite cool because it's got all these tools on the left-hand side. And one of them is this button here, prediction and measurement. So we're going to click on this, not this one, sorry. What am I looking for? The one up here, this one here. What we're looking for is trend-based fib extensions. What this allows us to do is it allows me to measure. There's this magnet button here that allows me to get the bottom. Click on the magnet. It allows me to click on this bottom, which is the beginning of this wave 1. Click on this top, which is the end of this wave 1. And then click on this bottom, what we're saying may be the low. Maybe the low. I'm going to click on that. So it's 3 clicks. Now you'll see this line appearing, and it says 0.618. Well, that's not the number that we want. So we either double click on this or click on this cog, and it opens up the numbers. And the ratio that we want is that golden mean, 1.618. That's the typical wave 3. Typical wave 3. Maximum wave 3, typical maximum is 2.618, which is related to the 1.618. Right, so they're the two numbers that we're going to look at. So when we zoom out, you can see that I've done these numbers before. I'm going to just delete one of them because they're no longer relevant. Let me just make sure I delete the right one. Because the price, I think, because it was guessing before. Now we've got a bit more price data. Just want to delete. Let's just delete. Okay, they're pretty much bang on the same anyway. I'm going to delete this as well. This is from a previous analysis. So now what we're saying is the typical minimum that we should anticipate a wave 3 getting to. Now it won't move in a straight line. Like it's not going to move. It's going to move more like an up, a down, an up, a down, an up, a down. As you saw down here, you know, for this wave 1, we saw, You know, it moved up, it moved down, it moved up, it moved down, it moved up, and then it moved down a lot. So that's what you want to keep in mind. It doesn't tend to move in a straight line. But the price projection is $3.14 as a minimum. And a typical maximum of a wave 3 would be $4.75. And we're taking recent price action as our main indicator. So again, because sometimes this is clear and sometimes it's not. We're basing it on this. Boom. And what we're basically doing is we're measuring how much price has moved from this low to this high. And we're projecting it forward from the next low, which we're calling a wave 2. And we're adding 61.8%, which is 1.618. And then we're doing the same again, but adding 2.618. So now we've got this price zone, right? These two price zones. That's important. So that's the typical range you can expect and anticipate. Why is that important? Well, some people just don't know when to sell. Like, you know, if you're buy and hold for 10 years, well, you don't need to worry about this short-term price action. You know, up, down, don't need to worry about it. You know, 10 years, 5 years, just let it ride. But if you're a shorter-term trader and investor where it's 6 months, it's 3 months, or you're looking to exit at certain multiples, then this information becomes really, really, really valuable. So what should we anticipate? How long should a typical wave 3 take? Well, the minimum time is the same time a wave 1 has taken. So if we can, it's almost like we're doing the exact same thing with the Fibonacci price, but this time we're doing it with time. This one's called trend-based fib time. Basically what it allows me to do is it measures how long did it take from the start, January 28th, I'll do my first click, measure the end of this wave 1, this high, which was April 14th, and then project these numbers forward from July 20th, which is that wave 2 low that we're talking about. And the ratio that I want is the 100, which is represented by a 1. Why? Because it's the same distance, and because this is important that you understand the method behind the madness. The distance from here to here, we're basically projecting forward from here, and that's what this red line represents. Yeah. So now there's one more number as well. The typical maximum of a wave 3 is how long it takes from a wave 1 to begin and a wave 2 to end. So now we can do the same thing, but we're going to literally measure. Now we're going to measure this here to here and project it forward. So then we'll get a number that's going to be pretty much in line with this end of this arrow. But what that does, it gives us a minimum and a maximum time frame. Now, as the data unfolds, we'll have more data points. So we're going to click and then click this part twice. And you see it pretty much bang on, right? You see that? Yeah, that's important that you know how that's got. So we've got really broad, it's really, really broad time and price, right? Really broad. But it gives you an indication on what's likely to occur next if the market unfolds as anticipated. We got this zone here, this zone here. That's a big price range, right? It's a big time zone as well. It's $3.14 up to $4.75. And the date, the minimum date is early October. So where are we now? We're in August. So like 2 months. 2 months for wave 3 to unfold to a maximum of early January. Now, what typically is the case is as the market unfolds, we're not sure exactly how it's going to unfold, but let's just say it unfolds something like this. As we get these data points, as we get these new data points, this point, this point, this point, it gives us an analysis that we can do on previous waves that can tell us how the market's responding, how's the psychology of the market responding to the optimism or pessimism, fear and greed of the market, of XRP. And that will allow us to see what's likely to occur next. Not guaranteed, but just likely, highly probable, because we're always working with probabilities. But at this stage, it's so early in this new trend, we don't even know if it's going to be a new trend. We just don't have enough data points. Hence, it's really broad. Right now, we have to keep it broad because we just don't have the data. But once we've got these data points, once we've got like wave 3 or this wave 4 formed, we can get really, really precise on what's likely to occur from a price perspective and a time perspective when it comes to wave 5. So there you have it, a full up-to-date analysis. We saw XRP back on July 21st, bang on. It's done a nice move up, 50 to 75% up since that date. I think it was, what was the price on that date? It was around 57 cents. Today it is, what's today's price? It's been around 75 cents, give or take. Now it's 72 cents. So it's around 50% up. So we predicted that quite nicely, but it's very, very early day, very, very micro. Because the big money, just so you're clear, is made in the big move. And you want to be able to buy near the bottom and sell near the top. Yeah, and with Elliott Wave Fibonacci, time and price, that becomes possible. So if you like today's video for my XRP army, you know, one of you guys told me, he said, look, there's a massive XRP army out there. So this video is for you guys because XRP, man, it's been around for a while. It's been through a bit of a war, and I think it's now coming out on top. And there's some positive things coming out with XRP. But based on the psychology of the markets, we should see some really positive things in price action. So if you like today's video, like, subscribe, hit the bell notification. Let's finish with a quote. I'm going to bring out the book, Think and Grow Rich. I used to study this book back in the day. I haven't read it properly for a while, but I used to study it, like read it. Literally, there was groups of us reading this book. And one of the sections is at the end of chapter 1. It says, faith is a state of mind. Faith is a state of mind which may be induced by auto-suggestion. By auto-suggestion. What the heck does that mean? Well, what I've learned over the years with a lot of courses that I've done, personal development, mentors, and so on and so forth, is that we operate 95% unconsciously. Right? It's been proven way beyond reasonable doubt with neuroscience, with Freud, all the studies that Freud did, and his nephew Bernays, and they've used it in advertising. You know, it's really understood by especially big corporates that we operate 95% unconsciously, which means that we're hardwired in a certain way, and our daily thoughts, 95% of our daily thoughts are unconscious. And only 5% are conscious. Now, we may believe, and you may believe, that we're conscious beings with full control over everything that we're doing. But what the science shows and neuroscience shows is that we are hardwired unconsciously, and we are operating as this unconscious being. Now, what it says here with the auto-suggestion of inducing faith or inducing the unconscious is by repeating a phrase that you want to program your mind with. So let's just say you wanted to really believe unconsciously that it's easy to make money and that it comes to you freely and effortlessly. The auto-suggestion technique was just to keep repeating that phrase as much as you can. Now, I personally used to do that, and there was pros and cons to it. The pro is that it's easy to do, as in it's easy, like you can write it down and just read it every night. The con is I found out later, but just saying the words doesn't really have the impact. You have to believe without doubt. You have to believe it. It has to be wired in. And the attention at which you pay to the thing itself is what makes it happen. So the unconscious is a whole area. I mean, I love psychology. I love seeing chart patterns because it represents psychology, how the masses are feeling. If you want me to kind of dive a bit deeper into psychology, I don't know if I should. I got a whole background in psychology and, you know, doing it in coaching and so on and so forth. I would love to share that with you. If you want it, let me know in the comments below. XRP Army, great video today. Looking positive. I'll see you in the near future.